It is Friday, October 26th, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was an educational get your ass kicked at Jiu-Jitsu Friday. We were doing a little bit of top guard passing from the half guard, and I really got a lot out of it. Because this particular pass, it does lend itself to upper pressure, and you know how I like upper pressure. Anyway, so yeah, it was very educational, and I got to roll with a very, very kind gentleman. And I say kind gentleman because this guy, I know he could just like rip my arm off and beat the shit out of me with it if he wanted to, but he's gentle enough and patient enough to wait for the opportunity as I slowly feed it to him, and he always gets it. It's one of those things. Every once in a while I manage to circumvent his attacks, but it's only because he's going at like 1/10 speed. You know, I mean, it's like when you're rolling with this guy, it's like if you were to take Einstein and a King Cobra and like make a clone out of him, right? It's like he's got his gaze on you, and that brain is like, you know, putting 8 million combinations together to get you to the end, right? He's playing chess, and you're still on checkers and shit, and just trying to stay, you know, trying to keep from dying and shit. And, you know, so like I said, man, it's just like, you know, maybe if you threw a little bit of octopi DNA in there too, because he's really good on his grips, and he's very, very precise. He doesn't discriminate between no-gi and gi grips. I mean, he transitions between the two so seamlessly you don't even notice it, really. You know, it's like he'll get a grip on your lapel just to pull you in really quick, and then just, you know, clear right over and get you into that choke position. But yeah, it was a pleasure to roll with him, only because, like I said, it's a rarity that you get to roll with somebody that is of that skill level, that even though you have earned your blue belt, will take his time, say, okay, oh, you want to press that way, okay, you're giving me lessons for when I'm out there on the mat doing competitions. You know, if I experience my opponent doing this, then I'll just slightly kind of twist my hips over this way and kind of scooch my knee under your body there so you can't move it and get you. And so yeah, that's the kind of guy he is, and you know, I've watched him compete before, and I feel sorry for anybody else on the mat against him, really. I mean, because if you're getting a breath, it's because he's letting you take a breath. That's it. You know, that's the only reason. That's the only reason you have a pause. That's the only reason you have a break, is because he's letting you have it. He knows that if you just wait just a little bit longer, you're going to make that stupid fucking move and he's going to get you. And you know, it's very humbling to roll with somebody like that, and you can always tell who they are, man. It's just like you feel how relaxed they are and how quick they tense up, like the 0.2 seconds before you finally moved into position. It's like, oh, it's too late. It's too late. He's got me. Fuck. Reset. Time to go again. And that's only if he's merciful enough to let you go. And so yeah, you know, we were doing some passes where, you know, your opponent is down and has one hook around one of your legs. Yeah, you know, mostly your inside leg there, and a shin shield between. And so it's basically about getting around that shin shield and you know, circumventing it. And I found that, like I said, the technique itself lent well to me, and I found that I didn't have to put a lot of strength in it. And it was one of those things where it was more about body position. So, like, the first thing I did was I tried to bring my knees as tight together without compromising my base. You know, so I really got a hold of my opponent's leg, And then the other thing that I was doing was I would grab on the ankle with an underhand and right above the knee with an overhand. And the first thing that I would do is push my pelvis into it, right? Into that shin. And it would change the angle that my opponent was able to hold their leg at. Okay, and so if you just straighten it out from there, you've got all the space you need to be able to get your knee right up to their inside hip there, and just lay right over the top of them and start working your way up from there. And so, like I said, I found a lot of comfort with it because, again, it didn't require a lot of strength, and it was something that if I just moved my pelvis, like stand up with my pelvis, and hold the leg there, and then dip my pelvis back out, and then straighten the leg out, and it was just like, oh my God. I can't tell you how many times I got caught behind a shin shield where this would have come in really fucking handy. So, yeah, but that little hip thrust, that wasn't something that I was getting directly from the instructor on there. Just something I kind of picked up from my particular form, and I can see where it would open you up to the possibility of being swept. But if you got really good containment on that lower leg, it's a little bit tougher to do, and really you're not going to live there. You push the leg in, you straighten it out, and with that top hand, with that overhand grip above the knee, when you push that, as soon as you get it straight with your body, the rest of it is easy. It's like if you can get it from full extension to just near your body, the rest of it just goes with your hips. Your hips turn as you're pushing, and boom, you're there. It'll get you around that knee far enough to where you can get your inside knee right up against that hip. Maybe park your other hand on the other hip and do like a slide up. From there. I don't know. It'd be a little bit tough to get your hip tight enough to their body from there to be able to do that. But I did manage to get into a full mount from there. And that included that after I got around the knee to take my the leg that was underneath me, and then get my foot over the knee that was around my leg, right? And then scotch the leg that's wrapped up toward their hip. And then push over with a staple over the thigh, let up on the down leg, and push them over to the other side, and then you're on the way to a good mount. Anyway, let's go ahead and throw down into some music, and I kind of want to circumvent a little body count for the opener, but I don't know. I'm feeling like it might actually be necessary. There's been a lot of mind control shit going on out there. And when I say mind control, I mean like semantic and mimetic bullshit. A lot of people talking about how, sex is a choice. No, man, sex is not a choice. Gender is a choice. What gender roles you choose to assume, that's a choice. But biology isn't a choice, man. You were born a certain way, and you might need to make some adjustments in your lifestyle to compensate for how you feel between your ears, but biology is biology. And there's been a lot of effort to get people to think that that's an actual option. It's not an option unless you've actually gone under the knife, and even then, if you were a dude when you came out, I'm still going to call you a dude. Anyway, here it is, Manslaughter, First Dance by Body Count, here on Coin Metal. And that was Rio Grande Blood by Ministry. I know I kind of broke it off just a teeny tiny before the trigger there, but it happens occasionally. Man, I really fucked up my ankle. I've been trying to get it to heal, and I even had a little bit of time off, but man, it's still kind of bugging me. Anywho, got a few things I wanted to talk about today. Got a few articles up on the old browser here. I was talking to somebody on Twitter, and I've shared my opinion on this quite a bit on this show, how I believe that Venezuela and some other places have demonstrated to us the full arc of crypto participation by the state. All the way from attempting to intervene in mining, all the way to the state capitulating and developing their own ICO and deploying, or attempting to deploy it, or deploying it, I don't know. But the point being that this is not yet even in full bloom. I actually believe that we're going to have another alt bloom, where we are going to find out really quick that the areas where proprietary software is a big contingent to our movement and our being able to participate in this space, we're going to find those to be the honeypots and that centralization that we're really trying to avoid as we move forward. And I still hold that I believe Ripple and I'm starting to think also Lightning Labs, that they'll be the primary instigators of this issue, although there are other platforms where such things have taken place already, where unknowingly people are going to be circulating abstractions of cryptocurrencies as opposed to cryptocurrencies themselves. You know, when we're talking about Lightning Labs, we're talking about, of course, Liquid, which is a quote-unquote sidechain. I'm not terribly interested in that, but I will say this: it's off-chain, and the coins themselves, the Liquid Bitcoin, they're not mined. They're just a token, you know, that I guess Lightning Labs creates or creates the ability to create, which, you know, it puts us right back in the place of having the Federal Reserve just printing up money. You know, is that I feel the danger is that at one point or another they are going to be issuing fractional Bitcoin via this Liquid Bitcoin thing, and that the Liquid Bitcoin will be mistaken for real Bitcoin, or it'll be assumed that it's a 1-to-1 ratio when it's really a 1-to-3 ratio, or, you know, or a 3-to-1 ratio, or something like that, and it's not, you know, immediately disclosed, or it's in the fine print or some shit like that, and people are going to lose money. And I think it's really unfortunate, and you know, we've been seeing a lot more activity with regard to Ripple. You know, I mean, enough that I'm hearing about Ripple from somebody over at a bar. A bartender is telling me about Ripple, and I'm like, God, no, Ripple is bad. I mean, and I don't mean to FUD on Ripple. They're as good as anybody as far as an attempt at cryptocurrencies, but you have to consider what cryptocurrencies exist for and what the function of Ripple is. And I'm not going to go into that. That's a whole nother can of worms, and we have more than enough worms on our plate for the evening. But yeah, so I think it's kind of unfortunate that I'm getting a response from, you know, somebody who, I guess he's traded a little bit of Bitcoin. I talked to him a little bit about it, where I asked him, it's like, so how long until you guys are going to be accepting Verge? And then I had to explain cryptocurrencies and so on and so forth. But yeah. Anyway, they're going to be accepting cryptocurrencies one way or another. And as a matter of fact, I got this article here on CCN, and it's exactly that. Mastercard wants to patent a fractional reserve cryptocurrency bank. Cryptocurrencies and Mastercard, a turbulent history. And you know what? Let's check something out here. They don't give us an author. This is authored October 26th, so today at 12:25 CET. whatever the fuck that is. Alright, continuing on. Like most financial companies, Mastercard never expected the blockchain, and by the time they took note of it, they were unprepared for the changes it could and will bring. So their earliest reactions were, to say the least, not positive. A massive firm, however, they were at the same time studying the technology and looking for ways to utilize it, as well as looking for ways to legally make use of cryptocurrencies. And we're going to right-click on that because they made that into a link. The company has been all over the place on the issue, eventually admitting that it could be, quote, good. The ultimate irony: fractional reserve blockchain. Now, some years after initially associating cryptocurrencies with crime, Mastercard is seeking a patent for fractional reserve management of blockchain assets. You read that right. And there are likely a number of cryptonauts laughing their heads off as they digest this. Fractional reserve banking is one of the problems Bitcoin was designed to solve. It is a practice which most who gravitate towards cryptocurrencies would prefer to see eradicated. I agree. God damn, that's a link too. In general, Bitcoiners are not fans of debt-based currency. Bitcoin and most other cryptocurrencies are therefore regarded as sound money. A step beyond not owning your keys, not even being sure the institution has your funds. Back to trust. The patent Mastercard is seeking application and we're going to read that one. God damn, they're giving us a trove of stuff to cover tonight. Describes a system which will simultaneously track crypto assets and fiat assets. Essentially, it's a web wallet with a combination of cryptocurrency and fiat accounts. Bitcoin banking institutions like Coinbase have had trouble gaining traction with cryptocurrency natives over the years for the simple reason that the user/owner of the funds does not then hold the keys. In the cryptonaut's eyes, not holding the keys to your coins is the same as not holding your coin at all. It can disappear, and there is nothing you can do about it. Thus, the largest component of Coinbase's customers has been newcomers looking for convenient ways to acquire Bitcoin. The patent essentially describes a cryptocurrency credit card network. Quote, thus, there is a need to improve on the storage and processing of transactions that utilize blockchain currencies. No, there is not. Existing payment networks and payment processing systems that utilize fiat currency are specifically designed and configured to safely store and protect consumer and merchant information and credentials to transmit sensitive data between computing systems. In addition, existing payment systems are often configured to perform complex calculations, risk assessments, and fraud algorithm applications extremely fast as to ensure quick processing of fiat currency transactions. Accordingly, the use of traditional payment networks and payment systems technology in combination with blockchain currencies may provide consumers and merchants the benefits of the decentralized blockchain while still maintaining security of account information and provide a strong defense against fraud and theft. They see a benefit to mixing traditional and cryptocurrency technologies, and the system described would likely include their existing products and payment networks. Quote, transactions that may be performed via a payment network may include product or service purchases, credit purchases, debit transactions, fund transfers, account withdrawals, etc. Payment networks may be configured to perform transactions via cash substitutes, which may include payment cards, letters of credit, checks, transaction accounts, etc. Mastercard seeks to do what it does best: process transactions. In the same way, funds can be moved around an exchange or a gambling site instantaneously once their deposits are cleared. Mastercard would like to make this possible for merchants. In this respect, despite the problems associated with fractional reserve anything, Mastercard could potentially make a massive contribution to the Bitcoin economy by enabling millions of existing clients to accept cryptocurrency payments. Patents take time to process, so we'll see how this develops. Yeah, some kid's probably working on an open source variant of this right now. Yeah, okay. We can see, I can see at least, the kind of a completion of what I've been talking about with regard to Lightning Network and off-chain transacting to begin with, is that once you've come off of the blockchain, directly interfacing with it, you're at the hands of the mercy of the third party that you're dealing with, whether it be Coinbase or Mastercard. And so, like this points, this article points out that using Coinbase, you aren't in possession of your keys. And I can't expect that it would be any different with Mastercard managing your keys, And what's the guarantee that you would be able to get your cryptocurrency back, or that you would be able to withdraw in the form of cryptocurrency? And that's too much trust, man. I mean, really, we don't have to trust that way. You don't have to trust that way. What you can do is, if you like a particular cryptocurrency out there and you do have a market where you could use that cryptocurrency as a means of payment, your next mission as a cryptonaut, as I've called cryptocurrency users cryptonauts myself, so I don't know, I think it fits. Anyway, your next mission is to find the most frictionless way to transact that cryptocurrency, and usually, like with Verge, we have our QT wallet on the Verge website. So that to me seems like the easiest way to do it, or the best way to do it. There are, of course, Electrum and other options on that, but I think a lot of the fudding that you've been hearing about, you have to run your own node and all that other bullshit, it's to add friction that doesn't need to exist, basically. For every single cryptocurrency transaction I have ever performed, and they have all completed successfully without fail. The only failures I've seen in crypto have been on the part of exchanges, where I used to have like 4 accounts that I was trading altcoins on. I now have 1 because the other 3 died. They were all hacked. And that's on the fault of the cryptocurrency exchange themselves. Now, I won't go ahead and list the last one because then somebody will be working on trying to hack it, and I don't want that. But the point being that the cryptocurrencies themselves, I've never had a node that I've had to run other than on the wallet itself when I've done that. But most cryptocurrencies don't have your wallet as a node per se, but they do have the kind of functionality of touching back to the blockchain to verify things. But anyway, like I was saying, the FUD that you've been hearing about, you've got to run your own live node to be able to communicate with the blockchain directly, and fucking bullshit. There's plenty of people running nodes out there for the cryptocurrencies that you like. Now, if you wanted to additionally support the cryptocurrency that you like, mine the fucking thing. Mine it and host a node for it. I mean, really now, folks. The shit that I see coming is Mastercard is going to be circulating abstractions of digital currencies that were designed to be transacted at the speed of fucking light. Give me a fucking break. Why do I need a digital abstraction for a digital currency? Why? I don't. Cryptocurrencies were designed specifically to be transacted as currency from the wallet that they come with. Usually, there are some out there that, they don't have an appropriate wallet, and that's their fault. That's a shit stain on them as far as I'm concerned, because, you should be trying to get your users. Well, if you want to get your users, but have them transact your shit through another intermediary, your users are going to be subject to whatever that intermediary wants to put on them. Do you want to do that to your users? No. And I'm telling you what, the currencies that stay with being themselves and being transacted as money and focus on that and facilitating that the best they possibly can, they are going to succeed. They are going to survive. What I see coming is that those that start transacting volumes of abstractions in the stead of the cryptocurrency that underlies that, and just in loose association, you guys are going to get fucked. People that are going to try and do it in Bitcoin on Lightning Network, you're going to get fucked. I've been telling you for a long time now about Lightning that all of the routing problems, they go away if the person that has the hub owns all of the nodes. And Mastercard is distributed globally already. Okay, all they got to do is a little hardware change at their endpoints, and they're facilitated to be transacting these volumes of fractional Bitcoin or Ethereum or Monero or Verge or Litecoin or whatever the fuck. And they're going to debase the underlying cryptocurrency on the open market by circulating these abstractions in the stead of the real thing, but unbeknownst to everyone else. The place where these abstractions are cool is when you're doing in-house shit. If you're an exchange, rather than bouncing the volumes around, you put the volumes in immediate fucking ice cold dark fucking storage. Cold storage. You take the coins in, you put them in fucking cold storage. You hold the coins and you maintain 100% reserve. You make your fucking money on your transaction fees when people are doing their trades. That's it. That's where you should be looking to make your money. Fractionally reserving the volume that you have on hand, stupid fucking idea. You are going to get wrecked. These currencies are meant to be transacted digitally. There's no physical impediment that prevents that. The only ones that exist are imaginary. With a little bit of effort, you can get around them. Things like block time, you can account for block time. You could be doing your exchanges directly with exchanges, and so what? Charge a fucking premium on top of it. Now you can do retail transactions, and you don't give a fuck if it goes up a bump or goes down a bump. You don't give a fuck. You've already got the transaction completed at the price that you want. See, and this is something else that bugs me about cryptocurrency users. See, if I were doing this retail, and I'm thinking about this shit a lot, okay? Where even if you just had a Bittrex account or a Bitfinex account, or somebody that trade, or Binance is another good exchange. If you use Binance as your exit, okay, for your cryptocurrencies, where you're pulling it either into Bitcoin or Ethereum or US dollars or your fiat currency, right? What I would do is I would take the volume immediately to a exchange wallet, and I would put a sell order on it at a higher price than I received it, or a higher valuation than I received it. And see, I'm saying that because I anticipate at this point the volume of business that I would be doing explicitly in cryptocurrencies would probably be under 20% of the total volume of business that I would be doing in retail. You know, most people still use fiat, and that's fine. But I would want to have the capability to accept as many cryptocurrencies as there are live networks for, and there are a lot of them out there. As long as I have an exit, as long as I could take it to Binance or other altcoin exchange and sell it for my fiat currency, I don't give a fuck. You know, maybe take those funds on like a monthly basis. You know, so like you accumulate them on your exchange account for a month. And this is again assuming that your exchange doesn't get all fucked. But you have them when you sell them, you put it up as a sell order, right? And so you put the price on it that you want to sell it at, rather than just accepting what the market rate is and expecting Coinbase to give you a decent exchange rate on it. And I guarantee you, if you were to do that, as opposed to simply receiving it to a Coinbase wallet and restricting yourself to the coins that Coinbase is willing to accept, that you're going to lose out on the exchange rate. That Coinbase, they have an interest in making money. And so they're going to be looking to make money on the exchange rate that they get for it. And of course, there's always the latency of dealing with a third party. And so, you know, in the 2 or 3 minutes, they could be making a few cents that could be in your pocket. And on top of that, they've got atrociously high fees. So whatever movement you do into or out of Coinbase is going to cost you whatever profit you would have made by trading it on another exchange. And I've just mentioned quote-unquote centralized exchanges. There are, of course, decentralized options out there available that give you an even more direct interface with the person that you're exchanging with. And a lot of time you can find a premium on those markets that you wouldn't be able to find elsewhere just because they have a low amount of volume of trades. So, something to think about when you're considering what kind of payment options do I want to use. Again, these cryptocurrencies are meant to be used without third-party intermediaries, just directly between you and your customer. So that allows you the freedom to involve as many third parties as you feel comfortable with. You know, if you want to involve your bank, okay, you're probably going to experience a premium there, but it might be tolerable for you, right? You might have an exchange account. Again, slight premiums there, but at the same time, you have a more direct interface with the exchange rate. And again, premiums can be found on those markets that you would not find elsewhere, just due to low volume. And again, that's just for right now. That can change over time as these decentralized exchanges become more popular. We might see a shift in in the volume of use. Anyway, all I'm getting at is that cryptocurrencies allow you freedoms that your previous use of money, digitally anyway, didn't allow. And so Mastercard getting into this, I mean, it's cool and all, and I'm sure they'll be able to provide some kind of assurance, at least temporarily. But it really depends on how long they hold the coins, how they hold the coins, how they're exchanging the coins, so on and so forth. And so they're taking on a lot of liability and asking their customers to place a lot of trust in them. A lot of trust that isn't necessary in today's market. And so, whether or not it'll be all that successful, I don't know. But we'll find out. And we do have plenty of other stuff that we got off of this, and we're not going to cover that one because it's fucking old. Get rid of that. Fractional reserve banking and Bitcoin. Oh, Keynesian viewpoint. We may get into that. This is where we're going to go. Got the patent here for the Mastercard International Incorporated. So yeah. Oh, and they're trying to patent it in New York. Get close to the heart there. Anyway, let's go ahead and throw back down into some music. And that seems like a good one, but I'm kind of going down the list here, trying to find the right one. Well, no, that's not good. No, that's not good. No. Man, I got too many choices in here. Here we go. Pantera, Walk, here on Coin Metal. And that was Voivod with I Conspiracy. Man, I gotta tell you, I really like that song. I do not even feel bad that it's playing again in the background, but I'm gonna go ahead and fast forward it just because I just heard it. But anyway, yeah, Voivod. That was off their latest album, The Wake, and I gotta say, I really enjoy it. Anyway, before we dive into the guts of Mastercard's capitulation patent, we're gonna talk a little bit about another possible capitulation on the credit card front. I got this article here on ccn.com. Visa's CEO: crypto is not a big threat, but if needed, we will support it. According to Al Kelly, the CEO of Visa, the company could support crypto in the future if the global market moves in the direction of embracing consensus currencies like Bitcoin and Ethereum. In the short and mid-term, Kelly told Jim Cramer, the host of Mad Money, that cryptocurrencies as an asset class is not a threat to reserve currencies that serve as the basis of Visa's products. But he stated that as the adoption of cryptocurrencies improves in the years to come, Visa will facilitate the demand for the asset class. I think there has got to be some market that it becomes somewhat like a fiat currency in order for us to be comfortable. In other words, fractional reserve it. If it goes in that direction, we will move in that direction. We will want to be in the middle, Jim, of every payment flow in the world, regardless of how it happens or what the currency is behind it. So, if we have to go there, we will go there. But right now, it's more of a commodity than a payment vehicle. Fuck yourself, man. In the middle. Visa is the most influential credit card service company in the finance sector and is amongst the most profitable businesses in the market alongside Mastercard. In the long term, Kelly emphasized that Visa will eventually serve as a middleman to attract crypto users to send and receive digital assets with Visa on its platforms by providing fees to the company. However, by the time Visa would feel comfortable in integrating cryptocurrencies, which, as the CEO described it, it is as when the asset class is established, utilized by the mainstream, cryptocurrencies would not require middlemen to process payments. With non-custodial wallets and open-source platforms, use of cryptocurrencies can efficiently and securely transfer digital assets without paying additional fees on top of the transaction fee provided to the miners of the ecosystem, i.e. you. Currently, due to the lack of merchant adoption, it is difficult for crypto users to compensate merchants to purchase simple products like coffee and food, only because Bitcoin is dragging its ass and should have made its blocks bigger a long time ago. But we won't go there right now. We've got way more to cover. Let's see, transaction fees. Currently, due to lack of it, a financial institution at the size of Visa could single-handedly increase the adoption of crypto amongst merchants in a large capacity. Yeah, as a Lightning node hub. But the intent of Visa to target the cryptocurrency sector is to provide middlemen services several years from now when cryptocurrencies are already accepted by merchants and being utilized as an alternative currency to reserve currencies like the US dollar. That's a bunch of bullshit. They probably already got hub status already. If in fact Lightning is that developed. I haven't actually checked in a while. But yeah, I take the fluctuating volume of transactions to mean that it's not really there yet. Continuing. Fidelity's big bet. Oh, I'm sorry. Wait a minute. Here we are. Alternative currency to reserve currencies like the US dollar. Okay, yeah. All right. Fidelity's big bet. The time to support the experiment with cryptocurrencies is now, when it is experiencing exponential growth and is still at an early phase. Terribly early. Get the fuck in it, kid. Years down the line, the cryptocurrency sector could heavily rely on decentralized systems and services, which even platforms within the market, including Binance, expect, as seen in the development of the Binance decentralized exchange. Already, Fidelity, Goldman Sachs, and Citigroup have started to serve investors in the cryptocurrency market by seeing sufficient demand for the new asset class, while Visa, Morgan Stanley, and several other financial institutions remain cautious in entering the cryptocurrency market. Yeah, they're waiting for enough of the Bitcoin transactions to be happening on Lightning, and via other off-chain intermediaries, and then they will be providing liquidity. I have no doubt that these huge volumes of Bitcoin that we've been seeing move basically in peer-to-peer OTC transactions, that what we're really seeing there is Visa, Mastercard, Fidelity, Morgan Stanley, and all the other people that we just mentioned, plus IBM and others, wanting to serve as quote-unquote hubs on the Lightning Network. So you won't have to pay a transaction fee to the miners. No. You pay just a teeny tiny transaction fee to Visa, to Goldman Sachs, to Citigroup, to Morgan Stanley, to all the financial institutions that a lot of you got into cryptocurrencies specifically to disintermediate. So really, it's going to depend on what the market decides as a whole cryptocurrencies are to be utilized for. Personally, I already see the necessity for more liquidity in the retail market to be probably a key catalyst in drawing more people into the mining space, specifically with regard to like altcoins, where they could conceivably make a profit on their today's sale of altcoins. And with that, I think that the increase in interest in the organic side of things, the mining side of things, where it all started for me and a shit ton of other people, when people start embracing that aspect of it, start deciding to occupy the driver's seat of the vehicle as opposed to the back seat, where you can only pray that the driver doesn't run you into a wall, When more people decide to occupy the driver's seat, even on a small scale, and you might not experience a profit right off the bat. However, if you do hold a little bit of your volume and play both sides of the trade, you can actually make money. The tools for the average person, such as myself, I'm a nice guy, and I can be kind of incredible now and then, but for the most part, I'm an average person. I just happened to find out about this back in 2009, and have been in and out of it ever since, and basically in it for the last, I would say 5 or 6 years. And so, for me watching this happen, all I can say is that we're headed towards a bit of a liquidity crisis with regard to the central banks pulling money out of the banks and basically hodling it. They're withdrawing, they're not loaning out as much money as they were. They're contracting the supply. That means that the retail market is going to need something to transact with, some medium of value. And lo and behold, you've got cryptocurrency networks that have been live since at least 2009, at the most 2009, and at the least 2014. I mean, really, 4 years of live activity on their network, and pretty much persistent network activity the entire time. What else do you want? If you can move the monetary value from you to another party, regardless of their location and regardless of when, why exactly would you require a third-party intermediary to facilitate that very transaction? I don't see a need for it. And at the very least, what Goldman Sachs, Fidelity, and all these others are doing is ensuring that they will be able to persist over the longer period. As the US dollar is removed out of the market and the relative value of cryptocurrencies does increase due to the immediacy of their servicing the retail demand, I see that they'll be changing that cryptocurrency from hodling to selling, because they want to make a profit too. And then they're going to be taking that cryptocurrency profit and they're going to be rediverting it back into mining. Fidelity has already told us that they've been mining. IBM's been mining. They've been working on that shit for a while. Microsoft, I don't doubt that your machine is fucking mining in the background for Microsoft. Somewhere in there. Back in that operating system somewhere. But I foresee a real need for little villages out there in the middle of nowhere to have currencies to transact with. And my God, if Doge works out there, they're gonna fucking use Doge. It's just a matter of exposure at this point. There's already internet infrastructure all over the fucking place. I kind of put it in perspective to this one guy because we were talking about blocks. And see, when I talk to people on Twitter, specifically, I try to maintain a perspective of I'm not out to create enemies. Because honestly, you got enough fucking enemies out there, you don't need me as an enemy too. So my perspective is that we're all cryptocurrency users, whether or not we're actually active. It's something kind of like how in democracy or democratic voting, the vast majority of people don't actually participate in the vote because they've felt over time that the legitimacy of the vote itself is at question, and that the representatives that are made available to them to select from are not necessarily representing their values. And so they just don't vote. And that's a reflection of confidence. In the same sense, cryptocurrencies with regard to mining them and transacting in them, you're reflecting a vote of confidence one way or the other. If you're not using them, that's fine. You're just not using them yet. But this is completely open to you. You, if you're capable with regard to software design and whatnot, you could write some bit of software that would allow you to do all of the things that Visa does and Mastercard does, but in an open source way. And if you do it that way, the open source mentality with regard to software is what's gotten us here. And what we're seeing with regard to Mastercard and Visa, as we've been covering on this episode, is that these people are capitulating. They see the writing on the wall. And the fact is, they're going to be competitors, whether or not we like it. The question is going to be whether or not we can provide services of high enough quality to retain our user bases. And I could anticipate where there would be some adversarial behavior on the part of these competitors, because they have vast sums of money. They have big war chests that they can yield from. So I foresee over the next 2 years, specifically, it is going to be incumbent upon the communities that support cryptocurrency and people that use cryptocurrency to be trying to push it to others, because there's going to be a time when they're going to need liquidity and they're not going to have access to US dollars, they're not going to have access to euros or lira or whatever the fuck it is of their nation state, or nation, wherever you are, continent. They're not going to have the liquidity in your national currency. The central banks are pulling back. And so they're going to need shit to be able to buy groceries with. And Venezuela has shown us this full arc. And mining went to ground there. And I expect that it's still going on, where people that absolutely need to are mining. And people that know how to are mining. And I commented to this person about bigger blocks. Because, like I said, I'm not out to create enemies. And the impression seems to be, when you talk about bigger blocks for the Bitcoin network, people immediately default to the perspective given by Craig Wright, where he's talking about gigabyte blocks and terabyte blocks. Okay, on these scales, yes, you're going to kick the vast majority of people off the network. Now, what does that do? That limits participation. If it limits participation, it limits the integrity of the network. And it causes the centralization that we've come here to get away from. However, Moore's Law has been running this entire time that we've been limited to 1 megabyte on the Bitcoin blockchain. And I just read something about some big development in bandwidth, and I don't have the article right here, and we're probably not going to hit it tonight. But the point is that I was talking about blocks on the Bitcoin blockchain of 2 to 64 megabytes. That either we bump it up to 2 megabytes or 4 megabytes or 8 megabytes, all the way up to 64 megabytes. And he was still under the impression that it was going to kick the vast majority of the people off the fucking network. And I said, okay, let me put it in a perspective for you. The vast majority of the internet capacity out there, or people that are on the internet, can handle 1 megabyte per second. And that's really not much to ask for when you consider what speeds are actually available out there. But 1 megabyte per second. Alright, so now let's put this into perspective. Bitcoin Cash works on 10-minute blocks, just like Bitcoin does. The average block will complete in 10 minutes. Now, of course, there'll be network latency, and we're not going to get 100% bandwidth, but I just said, even if we did have max bandwidth, it would take 2 minutes to do 120, what was it, 2 minutes to do 120 megabytes. That's not 10 minutes, it's 2 minutes. You see what I'm saying here? And like I said, the vast majority of you out there have much faster internet. 1 megabyte per second is not that big a load for you. And so I think I terminated his fear of big blocks as an alternative to handing off transactions to Visa and Mastercard. As you can see from the articles we have read tonight, as I've been saying for about the last 2 years now, the intent is to have big-ass providers like Visa as hubs. But you will not be a node because you will not be able to afford the regulatory friction that will be required of a node in a payment network. And you can go back on my YouTube channel and you can listen there, man. I've got it all there. Every fucking episode that I talked about Lightning, which is probably every one of them, at least to some extent. I've been talking about how Blockstream and these guys, they wanted to drive the transaction flow to the off-chain into Lightning or whatever. A big-ass loss would happen. A call for regulation would happen. And then you would have Visa and Mastercard and Goldman Sachs and Citigroup and Morgan Stanley standing right there saying, "Oh yeah, sure, we'll do your transactions for you, no problem. Off chain, yeah, we can do that. 2 pennies, no problem. We can do that as your transaction fee today." And then tomorrow it'll be 3 cents, and then, that's 6 cents, and so on and so forth as the progression goes. And as I've stated before, these people intend to be doing it on the back of Bitcoin, but actually be circulating abstractions of value of volumes of Bitcoin instead of Bitcoin. And Adam Back has the facilitating tool, fucking Liquid, right? LBTC. That's not Bitcoin. It doesn't get mined like Bitcoin. And they could fit their peg right in there. Where you're getting 3 LBTC valued at the face value of Bitcoin, right? Because you've got 1 Bitcoin, and they're going to go up in value over time, and they're going to be able to buy the volume to be able to offset it when you come to the Bitcoin window and you ask for your fucking Bitcoin. And then one day that Bitcoin window is going to close, just like the gold window closed, and you won't be able to redeem your LBTC for fucking Bitcoin, and you're going to be asked out. Because it's going to be obvious by then that they've debased the volume that are in the market, and they've got way more than 21 million LBTC out there, and we're all hodling them, right? And so you'll probably see the first crypto run on LBTC. Yeah. Fun. But, this is the kind of thing that I think a lot of us have been seeing coming for quite some time and have been preparing for. And I expect there to be a rush into altcoins and an increased interest in people developing their own altcoins. That the market for altcoins will increase vastly because the interest is increasing vastly and the capability behind that interest is there too. And as that's drawn into coding for cryptocurrencies, people are going to realize, fuck, all this shit's open source. I can just hash my own fucking Genesis block, invite all my friends, and we can start our own cryptocurrency, and then we're back to square one with another alt bloom. I expect the need for liquidity in the retail market just to be able to keep fucking roofs over people's heads and food to their mouths, that's going to be enough to drive the next alt bloom. Yeah. And so, yeah, we've got capitulation by Visa and Mastercard. And I wanted to get into the guts of their patent. It doesn't seem terribly long, and got almost an hour to do it in. Might be able to do it. Let's see how many pages this thing says it is. It looks pretty... That looks doable. I don't know. We can at least go for the claims section. And so this is Mastercard International Incorporated, purchase, State of New York, country type, U.S. Country type, that's weird. And this is method and system for linkage of blockchain-based assets to fiat currency accounts. Abstract. A method for managing fractional reserves of blockchain currencies includes storing in a first central account a fiat amount associated with a fiat currency, storing in a second central account a blockchain amount associated with a blockchain currency, storing a plurality of account profiles, each profile including a fiat currency amount, blockchain currency amount, account identifier, and address, receiving a transaction message associated with a payment transaction, the message being formatted based on one or more standards, including a plurality of data elements, including a data element reserved for private use, including a specific address and a transaction amount, identifying a specific account profile that includes the specific address included in the data element and receive transaction message, and updating the blockchain currency amount included in the identified specific account profile based on the transaction amount included in the data element in the received transaction message. Holy shit. I basically described this abstract to some extent, at least. There was one little thing I'd left out of my thesis concerning Mastercard or Visa acting as a hub on the Lightning Network, is that I anticipate that they'll include this data element, and that data element will be a quote-unquote taint associated with the transaction, which will either go through their hub or not go through their hub. Meaning that if the user of the nodes that were involved in the transaction are not licensed by Visa or Mastercard to be facilitating the transaction, they are not going to be facilitating the transaction, because the data element will be the taint. And they're asking for a patent on this blockchain-based assets to fiat currency accounts. And they've got the data structure, I'm sure, to associate all the elements of taint to your transactions that they facilitate. And I'm sure if you're following along with me here, you can tell where I'm going here, is that if you are not licensed with Visa or Mastercard, none of your transactions will go through them or be handled by their hubs, because your transactions will not have the taint because you're not licensed through them. Now, how that will affect you is this. You might have a facilitator who is willing to do it for you, right? But what's going to happen is this, and I've been telling you this for a long time, that the blocks, the reason why Blockstream has been keeping the block size limited to 1 megabyte is because they intend for that to be the most expensive real estate on planet Earth. Because the Visa and Mastercard, they're not going to be doing transactions for $25-$30. No. They're going to be doing huge transactions for millions, if not billions of dollars that they're tying up in their multi-sig fucking bullshit off chain that they're going to be using as a base volume to facilitate other people's transactions. And so their input and output transactions, where they're initiating a payment channel and when they're terminating a payment channel, the miner fees for those transactions are going to be fucking huge. Because they're going to be willing to pay it, and they're capable of paying it. They have the fucking money. Alright? But you don't. And so you will be competing with Visa and Mastercard for block space. Do you think that you're going to be able to transact on the Bitcoin blockchain, competing for block space with Visa and Mastercard and IBM and Intel and all these other motherfuckers who got billions and billions and billions of dollars? No. No, you're not. So now you can see what I've been telling you guys for the last 2 years. There's another piece of the puzzle here. I've been saying it all along that already established payment processors would be the quote-unquote hubs in the whole Lightning Network schema. And here we have a patent for Mastercard where they're going to be licensing to nodes. And they might make it easy enough to pay for it to begin with. But like if you're not putting through enough throughput, maybe you can't afford the friction that they have associated, with the licensure requirement. And there you have it. I don't know that we really need to get too deep into this. Let's just do the claim, the description. Oh, wait a minute here. Glossary of terms. I'm trying to find just a chunk of data that we can chew on for a little bit. Financial institution. No. We'll just go back up here. We'll go through the claims because I think that's good enough. And again, this is the related U.S. patent documents, application number 19047. Filing date was May 21st, 2015. 2015! They've spent the time since 2015 lobbying for state-by-state licensing of money transmitters and custodians. Yeah. Let's go through it. Number 1, a method for managing fractional reserves of blockchain currency comprising receiving and receiving by a receiving device a transaction message associated with a payment transaction transmitted via payment rails associated with a payment network, wherein the transaction message is formatted based on a standard and includes a plurality of data elements, including at least a data element reserved for private use, including a specific address and a transaction amount, identifying by a processing device a specific account profile stored in an account database that includes the specific address included in the data element in the received transaction message, wherein the specific amount profile further includes a fiat currency amount and a blockchain currency amount, and updating by the processing device the blockchain currency amount included in the identified specific account profile based on the transaction amount included in the data element in the received transaction message. Number 2, the method of Claim 1, further comprising updating by the processing device the blockchain amount stored in a second central account based on the transaction amount included in the data element in the received transaction message. Number 3, the method of Claim 1, wherein the blockchain amount stored in a second central account is based on a sum of the blockchain currency amounts included in each account profile stored in the account database. 4. The method of Claim 1, further comprising initiating by the processing device a blockchain transaction using a blockchain network associated with the blockchain currency amount, wherein the blockchain transaction is for the transaction amount to or from the specific address. Number 5. The method of Claim 1, wherein the standard includes at least the ISO 8583 standard. Number 6. The method of Claim 1, wherein a second central account is configured to store a plurality of keys, each key associated with an account profile stored in the account database. 7. The method of Claim 6, further comprising generating by the processing device an address stored in each account profile of the account database based on application of the associated key to one or more hashing and or encoding algorithms. 8. The method of Claim 7, wherein the one or more hashing and or encoding algorithms includes the use of base 58 check encoding. 9. The method of Claim 1, wherein the transaction message further includes a data element configured to store a personal account number that includes a funding address. 10. The method of Claim 9, further comprising identifying by the processing device a funding account profile stored in the account database where the included address corresponds to the funding address, and deducting by the processing device the blockchain currency amount included in the identified funding account profile based on the transaction amount included in the data element in the received transaction message, wherein updating the blockchain currency amount included in the identified specific amount profile includes adding to the blockchain currency amount based on the transaction amount included in the data element in the received transaction message. 11. A system for managing fractional reserves of blockchain currency comprising a receiving device configured to receive a transaction message associated with a payment transaction transmitted via payment rails associated with a payment network wherein the transaction message is formatted based on a standard and includes a plurality of data elements, including at least a data element reserved for private use, including a specific address and a transaction amount, and a processing device configured to identify a specific account profile stored in an account database that includes the specific address included in the data element in the received transaction message, wherein the specific account profile further includes a fiat currency amount and a blockchain currency amount, and update the blockchain currency amount included in the identified specific account profile based on the transaction amount included in the data element in the received transaction message. Number 12. The system of Claim 11, wherein the processing device is further configured to update the blockchain amount stored in a second central account based on the transaction amount included in the data element in the received transaction message. Number 13. The system of Claim 11, wherein the blockchain amount stored in a second central account is based on a sum of the blockchain currency amounts included in each account profile stored in an account database, or in the account database. 14. The system of Claim 11, wherein the processing device is further configured to initiate a blockchain transaction using a blockchain network associated with the blockchain currency amount, wherein the blockchain transaction is for the transaction amount to or from the specific address. Number 15. The specific claim, the system of Claim 11, wherein the standard includes at least the ISO 8583 standard. 16. The system of Claim 11, wherein a second central account is further configured to store a plurality of keys, each key associated with an account profile stored in the account database. 17. The system of Claim 16, wherein the processing device is further configured to generate an address stored in each account profile of the account database based on application of the associated key to one or more hashing and or encoding algorithms. 18. The system of Claim 17, wherein the one or more hashing and or encoding algorithms includes the use of base 58 check encoding. 19. The system of Claim 11, wherein the transaction message further includes a data element configured to store a personal account number that includes a funding address. 20. The system of Claim 19, wherein the processing device is further configured to identify a funding account profile stored in the account database where the included address corresponds to the funding address, and deduct the blockchain currency amount included in the identified funding account profile based on the transaction amount included in the data element in the received transaction message, wherein updating the blockchain currency amount included in the identified specific account profile includes adding to the blockchain currency amount based on the transaction amount included in the data element in the recorded transaction message or received transaction message. Yeah, so I'd really be interested to find out if they actually have any intermediaries underneath them. You know, that they have, in addition to their own facilitators, additional facilitators that they depend on for their exchange rates. And I don't know. I don't want to go any further into this thing, but it is readily available for you on let's see. I couldn't find, here it was. No, it's a different one. On the article on CCN, Mastercard wants to patent a fractional reserve cryptocurrency bank. It's really funny because I guess they didn't bother to check the date of the application for the patent, because as we found out, it was 2015. You know, what's happened since 2015? We've been stalled at 1 megabyte blocks on the Bitcoin network. And we've had this big drive to push all the transactions off chain. Gosh. Sounds like these guys want to facilitate your transactions, man. Anyway, let's go ahead and throw back down into some music. And we hit up Voivod last time, so I don't want to do that. Let's go with a little bit of White Zombie here. Welcome to Planet Motherfucker. And that was Sixth with Behind Closed Doors. And yeah, so it does seem that there is attempts to drive cryptocurrencies behind closed doors. However, I don't really see that they'll be all that successful, because people's use of cryptocurrencies is at least derived partially by their confidence from having mined them, or transacted in them, or exchanged for them. When you see it happen live on one of these cryptocurrency networks, and you can see it on the blockchain, on the blockchain explorer, it's kind of magical, really, because you're seeing probably the lowest friction transactions that have happened on this planet in the last, I don't know, at least 40 years. You know, the only way that transactions experience less friction is if they're happening in the form of direct barter. You know, where you're exchanging a good or service for another good or service. You know, back scratching or something like that, I don't know. But the point being that digitally this hasn't been possible, but it is facilitated through cryptocurrencies, at least proof of work ones. And in the longer term, I see that we are going to have some mediocre shift over to these, over to a reliance on abstractions of Bitcoin and other cryptocurrencies instead of transacting the real thing. And I think over the longer term, this is going to do one of two things. It'll either A, disincentivize mining, or B, disincentivize use. And that what we'll see is that those cryptocurrencies that maintain true to their original white papers and flex with the needs of their networks and their communities, but not in the sense of shifting to third parties, but, you know, to do things to try and make their coins better or transactable in other ways by additional means. Those are the coins and those are the projects that are going to survive the next 2 years. And it is survival, kids. Make no mistake. And like I said, I believe we are going to see another market saturation of altcoins. And it's going to be back to really doing your fucking homework on altcoins. And studying up and really participating in the networks and the decisions being made on them. I do foresee a need still, because for the most part we haven't really satisfied all of the requirements and capabilities of cryptocurrencies, that we're still underutilizing this technology on its face, even without the introduction of third-party intermediaries. And really, you got to keep that in mind, rather than shifting over to Visa or Mastercard to get your interface into cryptocurrencies. Download a fucking open source wallet. Something that if you were to audit the code, you could, or if you desired to audit the code, you could, because there's no permission involved in it. It's open source. I can guarantee you Visa's shit will be at least partially based on proprietary shit. And we just read the introduction to Mastercard's patent, so I can guarantee there's probably a Visa patent somewhere, because I mean, one doesn't follow too far behind the other one, and that original patent application was for 2015, for Christ's sake. So I've been saying it for quite a while now, that on-chain transactions with volumes of Bitcoin and other cryptocurrencies is really going to be the way to go. And those networks that can fulfill on those promises, or the promise of cryptocurrency, they're going to be the ones to survive. And I don't know. I hate being down about any cryptocurrency, and I'm certainly not going to talk down one now. But I don't think the regulation on mining and or the creation of new cryptocurrencies is actually ever going to come into effect. Because these same gatekeepers, they're not going to close the gates on themselves, not just yet. You know, they'll wait till they've got an altcoin or two that are established and used, and then they'll start trying to bump off others. But as far as regulatory friction, we're probably not going to see that for quite some time. that I think that governments have kind of learned the lesson from Venezuela that the public isn't going to give up on mining just because you introduce your own ICO, and I think the banks have seen the writing on the wall with regard to that too. I was going to read an article about how they prefer to use cryptocurrencies at this point. Oh, here it is. It's an IBM study. It's on ccn.com. I don't know that we're going to actually have time to go through all of this. No, I'll leave this for you guys to go to if you want to. It's on ccn.com. IBM study. Central banks favor digital currencies for interbank settlements. Yeah, you know they do. That $194 million bucks, that was probably one bank to another. The transaction itself was probably conducted exactly the same way that you conduct every single one of your on-chain transactions, too. It had to be at one point or another, right? Anyway, it is with that we are going to close this one out. I'd like to thank you all very, very much for listening. I certainly do appreciate the support. We will be back again on Monday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because not even Visa or Mastercard will do it for you. Thank you again for listening, and y'all have an excellent evening. And as far as our last dance is going to be, it's got to be Clutch. Escape from the Prison Planet. Here on Coin Metal. Thank you again for listening, and y'all have an excellent evening.